The initial public offer of Route Mobile Ltd or RML has opened for subscription today and is coming at a time when it is getting tailwinds from the COVID-19 pandemic. In our Ideas for Profit today, we will discuss if investors should subscribe to this upcoming entrant in the markets. Well, Route Mobile Ltd provides cloud communication platform such as CPaaS or the cloud communication service to enterprises, to OTT players, to mobile network operators as well. Now, the issue size at the upper end of the price band at 345 to 350 rupees is 600 crore rupees, comprising a fresh issue of 240 crore rupees, while the remaining 360 crores is an offer for sale from the promoter Sandeep Kumar Gupta and Rajdeep Kumar Gupta, who are monetizing 29.67% of their stake. Now, the implied market cap at the upper end of the price band is 1990 crore rupees. Now, the proceeds will be used to repay certain loan, acquisition of any other strategic partner, purchase of office premises in Mumbai, and for general corporate purposes as well. Now, in terms of the geographical presence, the company already serves 18 locations across Africa, Asia, Pacific, Europe, Middle East, and North America. Now, RML generates close to 86% of its revenue from the global markets. Now, given the nature of the business, really, the impact of COVID-19 has been quite positive on the company. The work from home culture and the more usage of mobile applications have actually led to significant increase in the usage of the company's offerings as well. So the outlook for the industry is very promising going forward from here, and as per Juniper research, the average CPaaS revenue per mobile subscriber per annum is expected to rise significantly in North America and Canada, and same is expected to happen in the western part of Europe as well. Now, A2P, that is application to person messaging market, is also expected to grow at a compounded annual rate of 4.4% until FY22. Now, the management indicated that new segments such as rich communication service and OTT products and Internet of Things are also expected to drive the next leg of growth for the company going forward. Now, the company has continuously been expanding its service offerings and reach various geographies through inorganic route as well. And the primary objective of any acquisition is to foray into new product offerings, increase customer base and geographical presence as well. So, in fact, a part of the IPO proceeds will be really kept for any kind of promising acquisition that the company finds in future. The company has served more than 30,150 clients since the inception and across many geographies and industries, and has been really scaling up its client base as well with a low concentration risk. Now, the company serves customers from industries such as e-commerce, OTT, BFSI, telecom and retail, among a lot of others. Now, it has a lean balance sheet, it's cash positive and holds 116 crore rupees of net cash at the end of Q1. In fact, RML has also a number of clients on a prepaid business model. In Q1, 15.5% of the total revenue was generated through these clients alone. So that's a bit of a positive for the company. RML has also a strong financial performance over the last few years that we have seen. This is also clear from the fact that it has not infused any capital since FY7 and has been able to grow its operations only through internal accruals, and this is reflected in the cash flow from the operations, which has been quite positive and growing. So the company has also been consistently profitable since the last decade, and the management really believes that the sustained growth is attributable to higher operating margins and low cost base. Now, its revenue witnessed a CAGR of 38% growth over FY18 to FY20, and on the back of COVID-19, it has already garnered 32% of FY20 revenue in Q1. Now, EBITDA has also expanded by 150 basis points in Q1 as compared to FY20, and primarily that is due to the operating leverage. In Q1, the profit after tax margin came in at 10%. RML also has a very strong return on equity, which averages around 34% over FY18 to 20 that we have seen. Also, in terms of valuation, the issue is coming at 16.3 times price to earnings multiple for the FY22 estimated earnings, which is quite reasonable at this point in time. And RML clearly stands out when it compares itself to the peers in terms of financial performance and also the valuation parameters. Hence, all the investors out there who are looking to subscribe can definitely go for it, not just for listing gains but also for the long term.